Good morning. It's great to see you all. It is November 14th, Tuesday, half an hour before the market starts. The thing that we wanted to pay attention to, if you recall from yesterday, was the CPI report. So that was going to influence, at least in the early morning, going to influence how we were going to open up and dictate what's going to happen during the trading action today. So let's see what happened with that CPI report. Okay, let's go over to well, already you can see there is a huge reaction. You can see that in all the charts here. So obviously the market liked what happened. So in the CPI report, looks like we got slightly better than consensus on the CPI, and the ex-foods and energy also slightly better than consensus. So no real change a tiny bit of change on the ex-food and energy year on year, and a more significant change on the CPI on the monthly over here and the yearly on the CPI. So inflation, at least as measured by the CPI, is coming down. So the bond market should have reacted very nicely to that, or very favorably to that. No, that's Monday. Let's take a look at bonds over here. Yeah, it's huge. That's the wrong chart. Here we go. ZB. Yeah, huge reaction to it. So big, huge movement upward. And then if we look over here on the ES bond, or the stock should follow the bonds. Yeah, and they did. And you can see that there's huge reaction upwards, a little bit of correction, but then resuming that slope upwards. Same with bonds, resuming that slope upwards. So definitely a huge bid up, and then a positive bias in the market today. So with that big of a movement, futures should be well beyond random. So let's make sure these are refreshed. And yeah, that's over 1%, 1.3, about 1.3%, about 1% on the Dow, 1% on the Dow, and 1.5% on the Nasdaq. So a huge amount of upward movement. Definitely, that is significant. Well, very, very significant. The last week or two, you've seen us at like 0.2, 0.3. Whenever we get closer to 0.5%, that is definitely very significant, and we are 3 times that right now. So that's a huge movement upwards. What's that mean for us during the day? Because that's going to make it a very interesting situation for us. On the open, obviously, we're going to open upwards. There's no way that this is going to trade all the way back down in the pre-market. So there will be a gap up when we open in 20 something minutes here. So what we want to see and watch very carefully is what direction do we move once it opens. This will for sure generate a lot of volatility. It will for sure bring volume into the markets finally, because we've had these anemic markets over the last week, or we had a very low volume, especially yesterday. And so volume was definitely going to come in here. There's going to be 2 effects. There's going to be people who went in yesterday or a few days ago in anticipation of this movement upwards, and they're likely going to take profits. If you have a sudden 1.3% jump in the S&P 500 overnight, that is huge. So those people are likely going to take profits, or at least take partial profits. And then there's going to be the people who have the fear of missing out. They're like, oh my God, it went up. Oh my gosh, we are clearly above that MA90. We need to start putting capital to work. And they're going to be trying to buy it. So on balance, do people take more profit, or does more capital get put to work? Now, that's going to be determined by institutional participation. So institutions, based on volume, have really been sitting out and waiting over the past week. So they need to start putting capital to work. And with this as a clear signal upwards, some of them might be forced, even if they're of the mind like, hey, that's too much. That's a gap up. We need to pull back before I put capital to work. I need to at least fill some of this gap before I put capital to work. Some of them might not have the option to do that. They may have rules that dictate that they need to get a certain amount of their cash allocated and invested at certain periods, at certain signals. So a lot of them are there's going to be a certain portion of cash that doesn't have a choice. It has to go into the market now that we are clearly above that MA90. So on balance, I believe that we might have a slightly higher upward moving day. But that said, we still have a lot of stuff happening this week. So we have the retail sales report coming here tomorrow at 5:30 as well. PPI coming tomorrow as well. So if I was an institutional trader, I would only be trading that portion where I was forced to trade. I wouldn't be trading anything additional to that because we still have a lot coming up. So we can expect volume to come back today, but we're really going to see a lot more volume coming back Wednesday, Thursday, maybe Friday, but although Friday we're at the weekend again, so the tendency will be to be a little bit more conservative and start hedging at that point in time, unless this is just so enthusiastic that we keep moving strongly upwards. So I would look for a slight positive bias today. Unfortunately, our normal methodology of drawing lines is not going to be helpful to us at all because of that huge gap up. So we can draw a couple lines, but this is extremely limited range, right? That's not it. I don't expect these to be really strong levels. So we'll draw the lines, we'll put them there, just knowing that they may not be meaningful at all today, given that huge gap up and the limited range that happened after the gap up. All this stuff down here is going to be meaningless because we don't expect that gap to get filled today. So what we're going to really watch is this very thick purple line right here. That's the VWAP line. And then distance from the VWAP line. And as we approach and touch that VWAP line, do we get indications like the normal momentum, the volume, and the size and the direction of the bar? Do we get anything really interesting that shows us that we might break below that VWAP line? And if not, we're going to expect a bounce off of that VWAP line. And anytime we get really far away from the VWAP line, we're going to start trying to decide if that's going to pull back to the VWAP line. Now, what does really far away? That's going to be subjective. That's going to take a little bit of art and familiarity with the markets, since we don't have good levels to key off of. Let me see. Let's draw. So if we gap up 1.5%, that would be 0.5 times 15, about $7-ish on the S&P 500. So we gap up to 447. Now that's right into this resistance right here. Okay, so that's perfectly into horizontal resistance. We got a high at 452 and 450. So those are where I'd be looking. Okay, so possible overhead resistance right here. That's still quite a distance away though. So really we're going to want to see, this is a very important level though. So it's no accident that we traded up to this level and then started to leveling off. So, and we want to see during the regular trading session. So you can see actually right here, I was pretty close, 446.13. That's where it looks like the pre-market trading is happening, right in this horizontal. So 449 to 452 is a region that we want to pay attention to, but we're really going to want to see, because since we are perfectly at resistance, we're going to want to see which way it breaks. Does it break down or does it break up? This one is for, you have to have a really distinct strategy of where you want to go. So if you believe in the gap fill, you could buy a out of the money put right away and try to capture that movement, because this is a huge movement. There could be a huge correction. So today is a good day to go for those really cheap out of the money puts or calls. I would say puts, because we already traveled so far up. I wouldn't do this to the call side, because I wouldn't expect this to be, that after a 1.5% gap up, we're not going to move that much higher. Normally, a huge movement, a large movement in the S&P 500 on a day is 1.5%, and we've already gotten that. So do we get up to 2%? Possible. Do we get up to 2.5%, 3%? Very unlikely. Very unlikely. So let's see, even on these gap ups right here, see that was a 1% move. This gap up right here is a 1.92% move. This gap up here was a 0.91% move. So the biggest one we saw was that 1.92, and you can see that's a huge gap, and it traded higher. So we already moved on our gap right here, where we'll already have moved about 1.5%. And if it continues to trade higher, it just really doesn't have that much more room to go. So the higher probability that where if you could buy a 5 or 10 cent put, and then if it retraces, you can make 10 to 20 times that amount on the way down. But if you're wrong and it moves up, then you've lost $10, right? So that's a pretty good reward risk ratio, where, hey, I'm very comfortable losing $10 if I might make $100 or $200. And then you size according to that. Hey, I'm actually comfortable losing $100. Okay, well, if I lose $100, I have $1,000 to $2,000 of potential today. So that could be a really interesting day trade for you, if you wanted to take a look at that. Okay, other than that, I would just be watching how everything moves. So I wouldn't be trying to day trade. Well, unless you're a really active day trader, I wouldn't be trading much else. So Tesla can move independently on its own. Apple is usually pretty correlated with the S&P 500. Okay. And then the other one that I was looking to possibly day trade is AMD, but really everything is being overshadowed by this huge move in the bonds, and then because of the CPI and that influencing what's happening in the markets. So if you're net long, congratulations. You might be one of the people who are taking profits near the open. Yesterday, we were talking about I was getting more balanced in my portfolio, so I removed a bunch of shorts, added a bunch of longs to get more neutral and slightly positive leaning. So we're well positioned, and if you're leaning the same way, then congratulations, this is a big day for you. And I would consider taking profits, because that might, and then now that anytime you have a huge profit, at the very least, you want to protect that profit. So you can take partial profits, you can move up trailing stop losses, you can buy protected puts, you can do all sorts of things in order to lock in some of that profit. And I definitely would be doing that today if you've got it. Okay, so that's going to be it for this morning. We're about 15 minutes away from the open. We'll see how this day develops, and then we'll see each other at the aftermarket session.